Okay, in this video lesson, we're going to be talking about peak trading hours. Now, what we mean by peak trading hours, these are hours in the Forex market where you're going to have higher volume, meaning higher levels of trading activity throughout those hours. So this is a handy chart here that we got, and if you look over here to the left, you can see this is a Sydney trading session right here, starting from left and coming all the way to the right. So this is when Sydney opens, and now you can, this chart's available over at Oanda.com, so you can change your time zone. We're at GMT 7, but you can change it to see when these sessions are going to start here, according to your time zone. So right here I have Sydney. You can see Sydney opens in the afternoon here, my time, and goes for a few hours, and then Tokyo opens on top of Sydney. So we have a portion of time where the Tokyo and Sydney markets are going to be open. During these particular sessions, things, the Australian dollar and also the yen are going to be in play during these specific hours, because that's when business is being transacted in these countries. So and any pairs that have to do with those currencies are going to have a little more volatility during that time. As you can see, it comes over, those sessions end, those countries close up for business, and we get into the London session there. There's a little break there, but then we enter the London session. Now, London comes in, and then New York opens on top of London. So these are going to be the biggest sessions in the market, because London and New York are pretty much the financial centers of the world. You have all of your big prop trading firms, hedge funds, big financial business entities are going to be located in those two cities, and they're going to be trading along with those time zones and those trading sessions. So this is typically where, in the big FX pairs, I mean the euro dollar, dollar CAD, the big major FX pairs, you're going to get most of your big moves, your big trading activity between these two sessions. And we'll look at a chart here in a minute, and I'll show you what I'm talking about. But right now, whether you're in a swing trade, or meaning you're going to be in a trade for maybe a day, 2 days, 3 days, maybe a week, the big moves of that trade are typically going to happen during this time frame, from London open to New York close, especially in the overlap time here in the middle. So, like I said, if you're going to be in a longer term trade, that's where you're going to want to look to check on that trade. Usually like middle of the New York session, it should really be playing out to. And that'll give you a good opportunity to kind of check the status on that trade and see where you're at. Now, for short-term scalping, trying to jump in for short-term opportunities, let's say the market's already created momentum and is moving in a direction, and you're just looking to find a short-term opportunity for the morning. Those opportunities are going to typically be within these two sessions as well. That's where you're actually going to get enough volume in the market, enough meat in trading volume to actually give you a trade. So for scalping, this is definitely the peak trading hours that you're going to be looking to find those short-term opportunities. So, and as you can see, this is a volume graph here, and it's showing you you can see how the volume mounts, and then it peaks out as these two sessions overlap. And like I said, with the more volume, typically you're going to get bigger movement, which is going to create volatility, which creates opportunity. So let's take a look at this on a chart and see how the price activity mirrors the volume levels here on this particular graph. Okay, so I pulled up a chart here. This is a 15-minute chart, meaning every candle here is 15 minutes of time, and this is the dollar CAD. And this is actually relatively recent. It's not too far back on the chart here. But what I've done is I've put a blue line and a green line and a red line, and what these lines stand for. The blue line stands for when the Tokyo market is opening. The green line stands for when the London market is opening, and the red line stands for when the New York market is opening. And what we're going to do is I want to go through each one of these sections, and I want you to see the progression of how the volume kind of builds the market activity, if you will, and leads to a move through London and New York quite frequently. Now, it's not always going to happen. There could be some major accumulation, consolidation, contraction phase going on that leads to a bigger move a few days later. But for the most part, you're going to see how the volume builds, and then you get some sort of move, usually through London and New York. So let's start right here. Right here you have Tokyo open. You can see the market's crawling around. Has a little bit of activity. It's not too bad, but still pretty flat. Then London hits right here. You can see we're starting to open up a little bit more, and then New York hits, and then we have a sharp drop, and then a big rise. So you can see how it just kind of slowly builds with that price movement, and led to this big uprise here. Okay, same thing. The day resets. Right here we have Tokyo open, and keep in mind there is a Sydney session before this, but it's usually so flat that I'm just going to go from Tokyo forward. So right here we got Tokyo comes in. We actually have some nice movement throughout that session. It's moving usually a little more than it normally does. Then we have London come in, and it starts to get really whippy, and then New York comes in, and then we get just some big whips. This is all just kind of manipulated market. Just having that heavy volume coming in, but still an undecided consensus as far as where the big banks want to drive it for a bigger trend. So, but you can see that volume still increase, even though we didn't get an overall huge price change. I think this day we had from top to bottom down here, it's about 563 points or 56 pips. So, not a huge price change. So now let's go over here to this next day here. Tokyo opens, crawling around. This is normally what's expected in that Tokyo session. Here comes London. We start to come in with a little more volatility here. Nice little rise. New York opens, and then boom, there's that big move right there. So you can see that volume led to that bigger move, and this was probably being set in place by this whippy activity that happened down here. Big banks accumulating positions throughout this New York session in order to profit on this rise here. So go to the next one here. Here's the Tokyo session open. Very low volatility. Coming into London, starts opening up. And actually had a nice little run through London. And then New York just whips down and just goes back into the contraction phase. So not a huge day, but you can see how the volume did increase coming through that London into New York, which is, like I said, if you're scalping, you're trying to look for short-term opportunities, you're going to find most of those trades in this time frame between London and New York session, right in here. Okay, so next one here, Tokyo opens, have some nice kind of whippy movement, but it's still just a little bit of volatility there. Nothing for any long-term trades, meaning, swing trades for days, 2 day, 3 day. Not a lot going on here. But coming into London and New York, we did have a nice fall right here. So you can see the volume hit on London, and then we had a drop. Let's see here, about 79 pips, 791 points. So not bad. So that volume dries up for that day. Let's see, we come in here on Tokyo Open, crawls around. London crawls around too. New York gets even more whippier. You see the volume coming in, it's just back and forth, back and forth, back and forth. Nothing really happened that day. Normally when you get several days that are like this, especially in a short period of overall time, you're probably headed for a pretty big trending move. So we'll come into the next day here. Whoops. Let's move that back to there. Right here, Tokyo opens, and you actually get a nice move out of Tokyo, which doesn't, it's not that normal. Usually low volume there, but big banks are coming in, pushing the market down. Then we open up for London here, so they have a nice manipulation upward, fill their their sell positions. Retail traders start to buy the market. Market makers sell to them, take that sell side, and then coming to New York, you had a nice trend throughout the rest of that day. So this is not any kind of golden goose strategy where you can just say, oh, I'm going to look at the market every day at New York Open, or and then I'm going to put a trade on. Like, this is just something you need to keep in mind, that if you are in a trade during the Tokyo session, you just need to know overall that if that trade is taking a while to pan out, you need to have, this needs to give you an expectation of what the market typically does volume wise in those time frames that you're trying to trade. So if you're getting in a trade in Tokyo and you're planning out that it should be somewhat of a short-term trade, maybe you're going to be in there a half hour, 2 hours, well, and you're expecting 30-40 pips, you're probably not going to get that during the Tokyo session, just because usually the volume is not there. Now, like I said, those scalping trades are going to be much better coming through New York and London. So that's really where, if you're going to focus on short-term opportunities, that's really where you want to play that game coming through London and New York. But anyway, it's just something to watch, and the goal of this lesson is just to get you to understand that there are peak trading hours. Some of you guys that have traded for a long time already are very familiar with this concept, but those of you that are in this course and are new probably didn't know about this. So this is just one of those little pieces of information that's going to help you form your overall edge, and you're going to use that in accordance with what you learn with how to use the ATS software. So hopefully this explains that. One thing you're going to need to do is find out whatever time zone you're in. I know we got users all over the world that use our software. You're going to have to figure out when the market opens and closes are all happening relative to your individual time zones. So you can check that out. It's just some research online. In about 5 minutes, you can figure it out with a little bit of online diligence. So anyway, hopefully you get this concept, and hopefully it was a pretty straightforward explanation of that. So we'll see you on the next lesson.